Economic downturns happen regularly, but it's hard for experts to determine exactly when or how serious they will be. Although these downturns can create challenges for small businesses, they can also be navigated successfully. So, let's continue learning the best way to survive during a recession. But before we start, don't forget to subscribe to the channel and tap the bell button so you won't miss any of our videos. The best way to invest is through DCA, or dollar cost averaging. This means putting money into your investments regularly, no matter what the market is doing. This method often works better than trying to predict when to buy or sell, which many people struggle with. A common mistake is thinking that investing is a one-time deal, like putting in money and forgetting about it. In reality, investing is an ongoing process. When a recession hits, smart investors often buy more to lower their average cost and boost their chances of profit. For example, if you bought Bitcoin at $50,000 and it dropped to $17,000, not buying more could mean you wait longer to see a profit. Those who keep investing during downturns may have already seen their returns grow. This approach works for stocks and the S&P 500 as well. Don't try to time the market. It's unpredictable. The market may continue to decline, but as long as your investment strategy remains sound, you can see these price drops as opportunities. If you focus on long-term investing, each price decrease is like getting a sale. Just remember not to put all your money at risk for short-term gains. You should be fine. This takes discipline. Avoid the temptation to sell in a panic. Stay updated on the market, but don't overreact. A common mistake among new investors is making significant decisions based on temporary news headlines. While staying aware of market trends is essential, resist the impulse to react to every news story. Often, this is how wealthy investors influence regular investors to sell off their holdings. Think of each market dip as a new investment opportunity. Each one will yield different results. Your patience is crucial here. Learning to control your reactions can greatly impact your financial future. Don't try to outsmart the market. Avoid selling now just to buy back in at a lower price later. Treat your investment like a savings account. Add money but only withdraw if absolutely necessary. Wealth is often built during tough economic times. Over the past 2 decades, it's become clear that you don't need to win every day. You just need to take advantage of the right opportunities. Understanding the U.S. economy's behavior after recessions is key. If you observe closely, you'll see that recessions happen about every 10 years, almost like a predictable cycle. After hitting the lowest point, the economy typically enjoys around 69 months of growth, with average gains between 25% and 50%. Looking at the overall picture, you'll notice that recessions are usually just around 10 months. Following that, there's often a long period of steady growth. Knowing this pattern can change your perspective on finances. You'll have a clearer idea of what to expect, which can help you stay calm. When a recession starts, consider investing regularly in the S&P 500 for the duration of the downturn. Just one smart decision during a recession can significantly improve your financial position. Wealthy individuals often learn this kind of wisdom from those who are even more affluent, and they know how to prepare for tough times. Recognize the signs and take the right actions to grow your wealth during a recession. Avoid raising your prices and refrain from making unwise purchases. Lately, costs have risen, and many people have less money to spend, especially during a recession. If you decide to hike your prices, you might lose more customers than you gain from the extra income. For instance, a company in the fashion e-commerce sector tried to raise prices during the pandemic, hoping to recover losses. However, they quickly realized that loyal customers were unhappy about paying more for items they once bought at lower prices. It took them 2 years to understand that returning to previous prices and finding ways to reduce production costs was a better approach. Money is especially important in difficult times, so it's crucial to handle it wisely. Instead of buying a new car, stylish clothes, or fancy vacations, prioritize saving. Use your money to invest in things that can earn you more money. After the recession, those investments can help you afford the nice things you want. It's time to be careful with spending. The most successful companies that emerged strong after the 2008 recession focused on affordability. For instance, Airbnb offered cheaper lodging than hotels, and Uber was often less expensive than regular taxis. Your business should focus on saving money. Instead of buying new supplies, try to use what you already have best. Skip unnecessary upgrades like buying your team new laptops. When you do need to spend, consider the long-term benefits. Only invest in things that will be useful for a long time. Adjusting your investments is important. When wealthy people talk about this, they mean that not all parts of your wealth will perform the same way. Different sectors react differently to market changes. For instance, if your technology stocks are doing well, while your travel stocks are struggling due to COVID, it might be wise to shift some of your tech profits to the travel sector. Your investments should reflect your knowledge and experience. This is what we refer to as the expertise ratio. Your investments should match that ratio if you know about 70% real estate and 30% stocks. Each year, review your portfolio to see if it still aligns with your expertise. If not, adjust by reallocating funds or investing more in the areas where you're underexposed until you regain balance. A paper loss doesn't equate to an actual loss. It can be challenging to navigate an economic downturn for the first time, but try to stay composed. You're not in this alone. You might have jumped in during market excitement and heard about people raking in profits. Remember that a loss only counts if you sell your investments at a lower price than what you paid. On the other hand, just because your investment app indicates a 20% gain this month doesn't mean you should spend that money before selling your investments. Historical data tracking the U.S. economy through the S&P 500 over the past 60 years shows that if you're patient, your investments can bounce back and potentially increase even further. Being patient is crucial. This is why many seasoned investors say it's better to stay invested rather than try to predict the right time to make moves in the market. Lastly, it's best to ensure a reliable income to stay financially secure. The most helpful way to weather any storm is by effectively monetizing your skills. For individuals, this means being good at your job and having skills that are in high demand compared to others. For business owners or investors, it involves being a strong resource manager to build something sustainable that can generate cash flow. It's important to have money coming in consistently. Pay careful attention to your cash flow. Understanding exactly where your money is coming from and where it's going can highlight areas for improvement in your finances. Relying on savings alone to survive challenging times isn't enough. Those savings should be reserved for taking advantage of opportunities. Consider it this way. Regardless of what happens in the market, aim to have the same income next month. This level of predictability gives you a solid base for making financial decisions. By focusing on stabilizing your income, you'll be better positioned to succeed compared to those who might hesitate or wait it out. And this concludes our video on the most helpful ways to survive a recession. What's the worst experience you had during a recession? Feel free to share your thoughts in the comment section. Don't forget to subscribe to the channel and click the notification button to stay updated on the latest.